and any rebound is likely to drop again. I still believe there is a possibility of a drop to around $70,000 to the mid to high $60,000 range. That's why I'm continuing to hold a large amount of cash while waiting. In conclusion, it seems ABC corrected shortly. I was anticipating the ending diagonal, so I thought it might go up one more time. It did break through the previous high, but the move was too short. Just like a fake, there's no change in the analysis. However, one thing to note is that a bearish divergence seems to be confirmed on the daily chart. In such cases, an ending diagonal might or might not appear, and it often doesn't. Intuitively, for an ending diagonal to appear, it looks like this. It goes up like this, and then it drops like this. When there's a bearish divergence on the daily chart, it often falls without forming a diagonal. Of course, at that time, it was in the third wave of the previous bull market. Despite the bearish divergence back then, it corrected and then rose again. But the difference between then and now is that the relative strength index went into overbought territory during what appears to be the ending diagonal's third wave, and the following wave formed a bearish divergence at the beginning of the overbought zone. As I always say, divergences should only be confirmed in overbought or oversold zones. So, if the possibility of another rise was previously 70% and the possibility of it not happening was 30%, now it seems we should consider it almost 50-50. I think it will be difficult for it to go up. So now, intuitively, it looks like it will rise once more, forming the third wave, then fall and rise again, creating the fifth wave. The RSI might fall twice while the price makes two higher highs. This pattern has occurred in the past. At that time, there was also a divergence, with the RSI dropping twice while the price made two higher highs. If an ending pattern forms, it will follow that structure. Otherwise, the confirmed bearish divergence suggests further decline. If a bearish divergence occurs on the daily chart, recoveries are rare, and any rebound is likely to drop again. I still believe there is a possibility of a drop to around $70,000 to the mid to high $60,000 range. That's why I'm continuing to hold a large amount of cash while waiting. So, I will outline my trading plan based on probabilities. Waiting is still the strategy if it goes up one more time, and if the next rebound comes, it will fall again. I won't trade until now, but it might go up one more time. If the ending is confirmed, I will enter after seeing the trend break. I will set the previous high as the stop loss, and my short positions profits will be taken at the first and second target levels, maximizing potential gains. On the other hand, the stop loss level is very tight. If it drops from here, the ending is essentially over. If it falls further, a rebound is likely, but another decline will likely follow. The price will likely retrace in an ABC pattern. Whether it reaches the 0.5 or 1.8 level, I expect to enter a short position around there.